Welcome to The Business. I'm Alicia Barry. Coming up on the program, grounded again. Unions call for JobKeeper to be reinstated as Qantas staff are warned they could be stood down.
In a once-in-a-lifetime crisis like this, Australian workers should be able to expect that the government's got their back.
And buy now, crypto later. Payment platform Zip eyes expansion as competition heats up. With 3 states now in lockdown, the boss of Qantas is warning his staff he may have to stand some of them down without pay if borders remain closed for extended periods. Unions are calling for the JobKeeper wage subsidy to be reinstated and say thousands of people will lose their jobs if the federal government fails to act. Daniel Ziffer reports.
With more than half the Australian population in lockdown, everyone's feeling grounded.
When we saw lockdowns in Sydney and then Melbourne, we've seen an instant response.
Creating an income crisis from Campbelltown to Cairns.
We really need to see a return to some forms of support.
As lockdowns extend, people nationwide are calling their banks in trouble.
Well, the big thing that they're worried about is their ability to pay, particularly their mortgage or even things like their credit card or personal loans.
The JobKeeper wage subsidy kept workers connected to employers, but it ended in March, replaced by payments similar to those after a natural disaster.
In a once-in-a-lifetime crisis like this, Australian workers should be able to expect that the government's got their back.
We've got some epidemiologists saying this could go through to the end of September, at least in New South Wales. And obviously, if that is the case, the government needs to step up and do far more.
Qantas boss Alan Joyce told staff the New South Wales lockdown has already seen domestic flying fall from 90% of pre-COVID levels to around 60%. Add in the Victorian and now South Australian lockdowns, our total flying drops below 40%. No one will be stood down yet, but we can't rule it out if multiple states keep their borders closed for extended periods. But costs are mounting everywhere.
These lockdowns are costing around $300 million a day.
So there will be jobs that are permanently lost now that weren't lost when we had the JobKeeper in place.
But those support programs like JobKeeper, rent relief, a ban on evictions and the coronavirus supplements that topped up JobSeeker and a raft of other welfare supplements are gone. The virus hasn't.
Like Qantas, regional airline Rex has been the beneficiary of substantial government stimulus and the victim of travel restrictions, with its current capacity running below 40%. But Deputy Chairman John Sharp says the business has committed to retaining workers on full pay as long as lockdowns don't drag on indefinitely. He spoke to me earlier.
Obviously, nobody can continue to keep operating forever in an environment where you're getting little to no revenue. So we've been the beneficiary of very good support from the government in the past. And when it was given to us then, nobody thought we would be in a situation like this, where we're almost back to where we were when we started this pandemic. You know, we're back to almost where we were in April of last year. So no one would have expected, at least of all the government, least of all the airlines.
Is the level of government stimulus in place now for workers appropriate, given we are, as you say, back to where we were in April last year?
Well, the announcements that the government made in the last week or so don't go towards the airline industry because our businesses are all too large to be qualified for the benefits that the government was offering in those. We are still receiving some benefits for our domestic airline operations, which of course at the moment amount to nothing because we really have no domestic airline services since we've had to temporarily suspend them. And we are receiving as a regional airline a thing called RANS, Regional Airline Network Support, but that provides us with sufficient funds to keep regional communities connected to their capital city. It's designed that we don't make a profit from it, we just recover costs.
Do you have a time frame as to how long you can keep your staff on full pay before you're going to have to make tough decisions?
We just monitor the situation as it goes along. For the time being, we think we can survive, we can keep going as we are, but clearly that can't last forever if these lockdowns go for a very long period of time.
Will you be campaigning the government for more airline-focused stimulus if the lockdowns go beyond what you're expecting?
They have access to all of our accounts through the various programs that have been established in the last 18 months since the pandemic struck. So they're aware of our financial position, and we'll keep talking to them through that. And at the same time, we'll do what we've done in the past, and as we'll continue to keep offering all passengers who book with us a full refund, a guaranteed refund, if they can't take their flight as a result of a COVID-related event. And we'll also be saying to the government that all airlines should follow our example of offering full refunds so that people have got confidence back in our industry, because one of the things that these COVID lockdowns do is it takes away people's confidence from booking.
You invested quite heavily to take on the big airlines in the city markets. The Sydney to Canberra route was much publicised earlier this year. How has this lockdown affected that expansion plan?
Well, clearly it's had an impact on our plans. We started our domestic airline services on the 1st of March of this year. And to be honest, whilst we expected there to be, more COVID-related events, border closures and lockdowns, I think it's fair to say most people didn't think they would be going for as long as they are.
And how long do you think your overseas backers are going to wear this lockdown situation for?
Well, our backers are a company called PAG, who are headquartered in Hong Kong, and so we're fortunate that they're with us. They're strong, they're comfortable about where things are at, and they see upside in the future when these lockdowns go away and people can move again.
John Sharp, thank you so much for making the time for the business.
Thank you very much.
The Prime Minister says the disaster payments for stood-down workers are at exactly the same level as the JobKeeper wage subsidy in the December quarter of last year. But ACTU Secretary Sally McManus says the circumstances are very different.
In the December quarter, the country wasn't locked down. People were back at work, but we were in the recovery phase. We are now back, way back, worse than we were in the situation in the early part of the pandemic, and we've got indefinite lockdown happening in two of our biggest states. So that's not reasonable because businesses are actually shut where they weren't in December. And when the lockdowns happened in the beginning of the pandemic, it was $750 a week, and now they're giving people $600 a week.
Well, JobKeeper kept the employer in touch and almost obligated to the employee, as you point to. How worried are you that this relationship between employer and employee now could deteriorate the longer lockdown goes on?
I'm really worried about it. The whole point of JobKeeper was to keep jobs. Where you say to workers, well, you're off to Centrelink for your support, well, really that connection isn't there in the same way. If you're a casual worker, it's not there at all. And so I think this is a bad decision for the country. And the thing is that we had a V-shaped recovery when lockdowns stopped, and we had that for a few reasons. Number one, people are already in jobs, and so you didn't have to go through, reapplying and getting jobs. Number two, people were supported during that period of time, so people were able to spend and they were already in jobs. So we know it was efficient, we know it worked, we know it saved jobs. Why aren't we doing it now?
Speaking of looking for a job, the COVID supplement on top of the job seeker payment isn't around this time.
No, it's not. So last year, what we did is we lifted a job seeker so that people were actually lifted out of poverty, and that's the way it actually should be all the time. For some reason, the government thinks it's totally fine to have people in a situation where they can't survive and they can't get jobs because the jobs aren't there because we're in lockdown.
Sally McManus, we appreciate your time. Thank you.
No problem. Thank you.
As more players like tech giant PayPal jump into the buy now, pay later sector, there's competition to stand out. Afterpay is attaching itself to banking services, and rival Zip is now eyeing crypto transactions. Zip has seen revenue double in the fourth quarter on the back of its US business to $130 million, but its shares fell nearly 8% after the rate of volume growth wasn't enough for the market. I spoke earlier with co-founder Peter Gray, who's not worried about the entry of PayPal into the Australian market.
We have a really good data point in the US that, it hasn't impacted our volume at all. They've already increased their price in the US, their price to merchants. So I think what that's indicating is they're actually cannibalising existing lower cost payment methods as opposed to delivering incrementality through buy now, pay later.
Is one of the reasons you're looking at cryptocurrency transactions for customers to stand out from the pack?
Yeah, I think so. I think we sort of understand that buy now, pay later is a very good access point to a customer. It certainly delivers very loyal and engaged younger generations of consumer customers. And one of the features they're requesting most heavily is certainly crypto. We also believe there's better ways we can provide savings accounts with significantly higher coupons than traditional banking services.
What's your crypto offering going to look like? When will it be available? And are you wary of attracting the regulator's attention?
I think it'll be a reasonably vanilla program in the first instance, allowing customers to buy and sell crypto via the Zip app. So piggybacking off existing service providers under white label arrangements is most likely the go-to-market path, and that will be in the next 12 months.
Surging revenue in the US helped your fourth quarter revenue in total. When will this earnings turn into bottom line profit?
Yeah, we delivered some very pleasing revenue growth, particularly in the US. The US now makes up more than 50% of group revenue, which was a first-time achievement for that part of the world. I think a very important call-out is the Australian business has been cash flow positive for 3 years. So we do have the ability to demonstrate strong unit economics and what that might look like on a cash generation business at scale. So for the short term, we're very focused on executing our growth opportunity in the US and in other parts of the world. We see ourselves as having a true opportunity to build a very successful global business. But at this stage, it's very critical that we continue to grow at scale.
When it comes to the current situation that we're in, we've got half of Australia in lockdown. Do you have any indication around what the spending trends have been during this period and how perhaps they compare to the last lockdown?
Yeah, so it's a great question. We're actually seeing slightly different behaviour already in the latest lockdown scenario. As you touched on, last year saw a very strong tailwind for our sector, particularly off the back of some of the stimulus that the government injected into the economy. What we saw in June, where large parts of Australia were in lockdown, was a significant tailing off in the broader retail numbers. So I think broader retail dropped by 2 or 3%, but Zip was still able to maintain 6% growth in the month of June. And that's in the absence of any government stimulus.
Are you anticipating things to slow further, irrespective of how your business performs when it comes to consumers?
Yeah, I think that is a likely outcome. I think the significant level of uncertainty with regards to timeframe and how this might play out at this stage is certainly going to force or dictate that consumers are a little bit more conservative. As I touched on, I don't believe that necessarily will impact the Zip growth, but more broadly in the economy, in the absence of the government stepping in, that's going to be the outcome for sure.
Peter Gray, thanks so much for your time.
Thank you for having me.
A strong US lead-in sparked optimism locally, and the miners helped lift the ASX to a record high. The All Ords also gained around 1%, and the Australian dollar has recovered some ground. Julia Lee from Berman Invest says data showing strong iron ore exports buoyed the market.
Across the market, it was green across the screen in every single sector, with the one exception of the healthcare space. In particular, the miners doing extremely well. We saw both the energy and the material sector up more than 2%. We did see trade numbers coming through, and iron ore shipments were at a record high for the second consecutive month. We did see the value of shipments in June rising by $1.1 billion to $14.8 billion.
And that's all from The Business. For more on those stories, you can go to our website and click on the business page. I'm Alicia Barry. Thanks for your company. Good night.